Hey, Bulls and Bears, today we have warnings of a new bubble about to burst. We're going to get into that. Also, a lot of recent developments, a lot of breaking news to get into today, as well as some of the go-tos that we go to every time they come up. The interest rate decision, of course, they held rates steady. We'll get more into that and what that means for you and me and the rest of the country and maybe even the rest of the world. All right, let's go ahead and get into it here. As everybody probably knows by now, rates were held steady, no shock, no surprise. We said this many, many times leading up to this. It was bound to happen. The central bank rate, basically, they're in a no-win situation right now. If they cut rates, they're going to get criticism for making things more difficult because when people are in a lot of debt, they need lower interest rates. The problem with lower interest rates, most of you know, lower rates equals easier money, easier to borrow money, and you can qualify for a bigger loan because your payments will be a little bit cheaper. On the flip side of that, it does make it easier to refinance existing loans, car loans, etc. And it's a no-win situation, like I said. So if they raise rates, that's a big problem too, because with the debt levels right now, people are just not going to be able to withstand higher rates, right? So obviously they're going to get criticism from the ones in power right now, from the current administration, and they are. They came out and said they should have cut rates. It was a no-brainer decision, no-brainer. That they're harming the economy, which is nonsense. And, so it's a no-win situation, folks. When you get to this level of the cost of living in these price levels, there's not much you can do, folks. Cutting, increasing rates, it's both lose-lose, and they're just trying to find new ways to kick the can down the road. A lot of the programs, though, that were helping people are being yanked away right now. We're talking about the loan forgiveness, and not just the forgiveness, the repayment programs. Instead of being reported, or instead of not being reported on people's credit, now things are being reported, like the student loans. We talked about that in a few a few previous episodes, right? So things are being yanked away. So it's going to be very interesting to see how the markets hold up, how the economy holds up, which is basically a combination of the U.S. consumer, borrowed money, spending money, and then how much federal money can be pumped into the system here. We'll get more into that here in just a little bit. But first, let's dip into the stock market a little bit. We're going to take a look at a Dow Jones chart here, S&P 500 chart as well. And if you're looking at the chart, let me just bring it up here. You see that what we've witnessed here over the past 5 to 6 months is basically a double top. We're looking at a 5-year chart right here. And I wanted to bring up a 5-year chart so I could see the last time we saw this similar pattern where we saw this peak and then a peak right after that, which didn't quite get to the previous peak. Very similar to what we saw at the end of 2021. And looking at the Dow Jones again here, we didn't see the market recover to that level until about 2023, the end of 2023. So it took over 2 years to recover after that last double top. That's the way it looks to me. And this is the Dow Jones, but let's take a look at the S&P 500. And what do we see? Something similar. We see this double top back at the end of 2021. Didn't get back to that level until going into 2024. So yeah, it's actually closer to 3 years then. Are we seeing the same thing now? Are we headed into a prolonged downturn? Now, this last one here wasn't quite a double top because that second peak right here went up higher than that first peak. But the sell-off has been pretty dramatic here. But has the fear of tariffs already been priced into the markets, or is there more pain and panic selling ahead, right? Big question out there. I don't think anybody knows the answer for sure. I'm being very cautious in my investing right now. I did do a dip buy, not at the bottom, but pretty close to that bottom within about 5 days from that bottom, and sold that off. I'm just kind of waiting to see what happens here because there's a lot more shoes left to drop with this whole tariff situation, the cost of living, with what's happening right now with resuming reporting these people to collections that have many different types of debt, forgiveness programs, handout programs being pulled away, especially the ones with the food banks. That's going to be a big one. What are people going to do? Like the millions of people that can't afford food, the food bank funding is being pulled away. A lot of federal programs, the rug is being pulled, folks. And when you hear the term rug pull, you know that there's going to be some fallout coming here very soon. And I shouldn't say very soon, because very soon means next week, next month. It's here now. I mean, we're seeing the fallout right now. Just look at all the pain that's rippling through the economy right now, all the panic, all the fear, all the anxiety. Now, back to the interest rate decision here for just a moment before we move on. I'm seeing a lot of people, even a lot of broadcasters, financial media people, saying that we need to cut rates because it'll make things more affordable, make it easier for people to buy homes. That may be true at the very onset of the rate cut, but then what happens? It doesn't take very long, a few weeks, a few months, and then the new buying power from all the people that can borrow money now, borrow more money to buy the homes, that pushes prices up higher, right? We're starting to see home prices correct in many different areas, and even nationwide. If you look at the official numbers out of FRED, the Federal Reserve Economic Data. So prices are coming down, but we still have a lot of the easy money policies that have been in place ever since 2020 with the emergency programs that were implemented back then are still in place right now. So easy money's still out there, folks. Rates are higher, yes, but the big thing, the easy money, the lending, the banks being unleashed from any sort of limitations, that is still in place. And until that changes, we're not going to see anything major collapse this economy outside of a big black swan that nobody sees coming, like maybe the entire system goes down, some sort of hack, again, some sort of black swan that nobody sees. World War III breaks out, somebody's flying nukes or something crazy like that. But outside of that, we're not going to see anything collapse because that easy money mechanism is still in place right now. Now, when it comes to the tariffs, we reported here recently, and you probably saw it in a lot of places, that ships are now arriving that are half full, and it's also a lot less ships arriving. I think it was about a 1/3 drop in the total number of ships arriving onto U.S. shores. Looking at the Los Angeles ports, that was the number out of Los Angeles. I'm not sure about the East Coast ports and stuff like that, but it's probably pretty similar because of what's going on here. But some people, even on this channel, had chimed in and said, well, it's not going to affect them. They're not worried about it because they're not going to buy much. They don't need much, right? And a lot of people would say, that's true, that you don't need much. But some people, they have to spend no matter what. It seems like they just have to keep on spending, right? Keep on spending. And now it's to a point where you have to spend. It used to be where you could just, say, I'm not going to spend. Well, now people are having to put food on their credit cards and necessities instead of just items that they don't need, right? But there's some reports out there still saying that these shelves, that we're going to see empty shelves in May. Now, we started hearing this back in March, went through April, didn't see anything explode as far as empty shelves. More reports today, news reports like this. Bloomberg, empty store shelves might be coming sooner than you think. The Mirror, exact date U.S. supermarkets will be hit with shortages in empty shelves. Actually, that's a new one. Let me dive into that one real quick here. The exact date. That would be very interesting if they predicted the date here. I kind of doubt this will happen. As stores scramble to find workarounds, the current administration's tariffs, one retail expert revealed when consumers can expect to feel the impact. Will you be walking into a store? All right, trying to get this out of my way here. Will you be walking into a store that looks like this? You can see the lady here. She's like, what in the world is going on? It kind of looks like a Big Lots that went out of business. Anyways, will there be store going out of business type of shelves cropping up all across the U.S.? Chaos from the administration's tariffs likely to start impacting shelves, and experts warned Americans, many of whom are currently stockpiling goods, could be coming sooner than you think. America's shop floors could soon look a lot emptier. All right, where's the date here? Molson Hart, CEO of consumer products company, has warned the economic impact of the escalating tariff battle will start showing up starting on May 10th, folks. Today's the 7th. So start showing up in 3 days. That's what they're saying. With product shortages and price hikes becoming increasingly noticeable in the weeks to follow. Now, I was actually shopping earlier Where was I? I was at last night actually. I went to get a shake, like milkshake. I don't eat a lot of dairy because the digestive thing, it's bad for me. But my wife had a bad day. She's like, I just need a shake. You ever have one of those days where you just have a bad day and you're just like, I'm going to eat chocolate. I'm going to eat ice cream. I'm just going to eat something to make me feel better because it's been a bad day. My wife had a very bad day. And she's like, I just need a shake. So we went up there. And first of all, the service was terrible. I walked in because there was like 4 cars at the drive-thru. Only 1 car was parked in the parking lot. So I was like, okay, let me walk in. It was like kind of late at night, 30 minutes before closing. Walked up to the counter, started looking at the menu. 2 or 3 minutes passed. Nobody even looks at me. There's 2 or 3 workers in the kitchen. Then there's a guy working the drive-thru. Nobody even looks at me. I'm like, does anybody working the cash register? So I asked the guy working the drive-thru, maybe 4 to 5 minutes into it, just standing there. And he's like, oh, I can help you. So he has to go over and make the shakes while still talking to the customer on his headset. Right? But terrible service. Have you guys noticed a drop off in service? But anyways, the shakes were over $5, folks. After tax and everything, it was $12 for 2 shakes. Right? I did get the large. $12, folks, for 2 shakes. To me, that's insane. $12 for 2 milkshakes. I remember buying shakes, and I kind of I'm dating myself right now. I remember buying shakes for $2 something, maybe $2.50, and not just the super small, the dollar menu size, but actually normal shakes for a grown up. The prices are crazy high. I've been hearing about this Jack. What did I say earlier? Did I say Carl's Jr. or Jack in the Box? It was actually Jack in the Box. If I said Carl's Jr., I was wrong. It's Jack in the Box. That's the one I went to. And I've been hearing reports about Jack in the Box closings here in California. And let me just pull that up real quick. And I know some of my more health conscious people watching this channel will be like, JJ, don't eat that stuff. Drink, eat, whatever you want to say, the shakes. They're saying it's not even real ice cream. I mean, I'm hoping not. I'm hoping it is, but who knows what's in there. Eat this, not that. Iconic fast food chain closing up to 200 locations. The chain says the closures will help pay down debt and fuel future growth, and Del Taco may be next. But yeah, Jack in the Box is one of the big ones there. Up to 200. Are they in California? Wow, they have 2,200 restaurants across the U.S. Now here in California, we have this $20 an hour minimum wage law. On the West Coast, there's going to be, let's see here, 150 to 200 combined. Let's see. It looks like they're not breaking it down for each one. Let's see here. More closures expected as franchise agreements end. Anyways, you get the picture. I don't really see the exact number unless I'm just not reading it correctly here. But closures are happening, folks, because of this $20 an hour minimum wage. We talked about that it would happen. How many people are going to go out and get $5, $6 shakes? And I think a burrito was over $6, almost $7 for a burrito. I remember when Chipotle first opened, you can get a whole one of those bowls at Chipotle for like $7. Now I think they're like $10. But a burrito now, almost like $6.50, maybe even closer to $7. And those burritos at these fast food places are not that good. It's mostly the tortilla shell. If you've ever opened up the tortilla shell after buying a burrito, not all places, but many times you open up the burrito, look, there's not much food in there. There's like a handful of food, and the rest of it is the tortilla shell wrapped around like 2 or 3 times, right? It's crazy. It's like 60, maybe even 70% tortilla shell in some cases, right? $6.50 for that, folks, at a fast food restaurant. It doesn't even specialize in Mexican food. So the burrito's probably not even that good from places like, Jack in the Box, Carl's Jr., McDonald's, all that. But moving on, folks, I got kind of off onto a food tangent there, milkshake/food tangent here. But we've got this report here out of San Francisco, which also could be the tip of the iceberg. These programs are being yanked, folks. 2,000 people evicted if the housing funds are pulled away here. A lawsuit, a coalition of local government officials said the current administration unlawfully imposed unprecedented new conditions related to the unlegals and pulling away housing grant programs from people. So there you go. Bay Area City could alone lose their subsidies. 2,000 people and face eviction. So without programs like this, not just this, but many others similar to this, just programs in general to help people, how many people would be homeless, would be on the street, wouldn't be able to make their ends meet and get evicted, have to go, luckily if they have relatives, they go live with their relatives or friends. But how many people would have to get up out of there, so to speak, out of their dwellings and apartment homes, whatever, if it weren't for these programs? Right? Nobody knows, because we've propped up everyone for so long. Not everyone, but most people are on some sort of payout, right? And maybe it's something that you paid into for years and now you're getting your checks because you're retired. I understand that. But the bottom line still is, if you miss one of those checks, you're in big trouble. For most people, not everybody, but most people are in that situation where they're paycheck to paycheck, or maybe Social Security check to Social Security check, what have you. If that check is missed, one or two checks, people are in big, big trouble. That's what bothers me. Not the fact that these funds are being pulled away, but the fact that these funds are necessary in the first place, these programs, rather. We shouldn't even be in a position where so many people are dependent on a money creation system that just creates money and sends it out to people, and then you just add it to the national debt, and you just run up more debt. And, so many people think that this is just something that can be done to infinity. And you have to look at the impacts so far. So far, we've seen the cost of living explode because of this endless money borrowing / money creation system. All right. Another story kind of related to this. I get depressed. A disabled man says he was abandoned by his mother after eviction from Northwest Side apartment. This says SA man. Is this San Antonio? Yeah, San Antonio. Disabled man, right there. Oops. Suppose I could bring up the screen to show you. Disabled man right there, evicted. Right? And that's just one of probably millions of similar stories, folks. It's really bad to see people that are homeless, but then you see somebody disabled and homeless. That's just salt on a wound. And that's just pain on top of suffering right there. Quote, we get down to about 2 weeks and they're packing up, and mom's like, you have to find a place to go. Saying that to her disabled son. Imagine having a family member that's disabled and you're like, you have to find a place to go. I can't take care of you anymore. Sorry. Because maybe she moved to a mobile home or something. Maybe she moved to a trailer. Maybe she's homeless. Who knows? There's no group homes. I've called these places. Nobody's answering. Right? Again, I'll bring it up here. Pretty sad, folks. This guy has no place to go. In a nation that people are calling the world's richest nation, we have a massive homeless problem. I'd have to look up a world statistic on this to see if we're the worst in the world as far as homelessness. I know many other countries they have poorer living conditions, right? So they may live in shacks. I guess you could say they're not homeless because they have shacks. The conditions are very poor, dirty water, stuff like that. But as far as first world nations, I'd say we have to be up there close to the top of probably the worst homelessness. And this is with all the rescue programs, right? Not all countries can just borrow unlimited amounts of money to keep their population from being homeless. Not every country can do that. We can. We have the world reserve currency. We have the money printer, obviously. So we can do that. How much worse would it be if it weren't for that? And would people still call us the world's richest nation, right, if it weren't for all the money borrowing capabilities that we have? And on that topic, I saw a report the other day that tried to make it sound like everyone is rich, because they talked about how home equity is at a record high. People have, I don't know how many trillions of what they called wealth or equity in their homes, but it was trillions. But they didn't include the debt and the loans that people took out, the mortgages that took out. They didn't subtract the mortgages from the equity. And it wasn't even the equity, it was the total worth of the real estate, right? So if you borrow $800,000 to buy a home, and the home is worth, $850 or maybe $900, maybe you overpaid, then or maybe it's worth less. Maybe you overpaid because the home is worth less than what you paid for it because prices went down. Either way, what they're looking at is the total value of real estate, and they're saying it's at a record high. But they didn't subtract the debt that was used to buy that, right? So pretty interesting how some of these numbers are reported to make things look better than they are, to make people look wealthier than they are, to make it look like the economy isn't based on borrowing and spending. Also, more in the news about this whole loan situation with the students here, with 1.6 trillion owed by over 42, close to 43 million borrowers. Folks, that's a lot of borrowers. We're resuming collections after 5 years as delinquencies reach record high. So another program that's been in place ever since the health crisis in 2020. After 5 years, over 42 million people now. They're going to see these late payments and delinquencies reported to collections, right? So how many less people are going to qualify for loans with this on their credit report, right? Maybe that's a deflationary type of thing. The less people can qualify for loans, maybe you'll start seeing prices come down in homes and maybe cars, right? But then you've got the tariffs on top of that, right? So again, it's this battle, deflation versus inflationary forces, and it's going to be very interesting. We've never seen anything quite like this as far as things coming from both sides, right? Yanking of these programs, changing the way things are reported on somebody's credit for loans, but then also tariffs and just high costs, high inflation, high price levels, right? I don't like to say inflation because inflation means prices going up compared to a previous time. Mostly we look at a year before, like year over year. That's what the CPI number does. It looks at year over year. But I like to look at price levels, right? So even if prices aren't going up, even if they stay the same, price levels are way too high. People have to borrow money just to get by for the most part, right? Majority of the population, folks. So we're going to see how this plays out. What do you think about all this? What do you think about the double top in the stock market that we talked about at the beginning? The economic warning. I almost forgot. I was going to get into that earlier. I apologize. This is out of the Telegraph. We got Silicon Valley skeptic warning tech's new bubble is about to burst. Veteran Gary Marcus believes the AI revolution is delivering diminishing returns. I said that here over a year ago, maybe even 2 years ago. I said this AI hopium. AI was being talked about as the new .com, that it was going to be the next big thing, that it was a reason why markets were going up. I think it's all manipulated. I think that's why markets are going up. The top 10% pretty much run the stock market, and they're buying stocks. And when you have a lot of programs that hand out money all over the place, you tend to see a lot of it go into stocks, right? That's why I think we've witnessed a double top here back at the beginning of the year, the end of 2024. And I think we're on the way down now. We may see some bounces back up, but I think we're on the way down for a prolonged downturn. I think much worse than the one we looked at on those charts a few minutes ago, which was about 3 years. I think we're in for a much deeper, prolonged downturn in the markets. We'll see what happens, though, if the rescue system that's in place to rescue the markets comes to it, right? If you know that that's going to happen, then you've got a investment opportunity right there. But either way, folks, what do you think about this AI hype warning of the bubble going to burst? The reckoning day may have come. The signs are there. AI is reaching a point of diminishing results. So he thinks the top is in. I've even said before this, I think the top's in. So anyways, what do you think about this, folks? Let me know down in comments. As always, keep stacking. Bye for now, everybody. Peace.